It's a time to buy, and clearly, as we head into Christmas, clearly that's how CSL is feeling at the moment. It is our stock of the day. It has announced it's close to $16.5 billion bid for Switzerland's Vifor Pharma, which would make it the fourth largest Australian M&A deal this year. Andrew, how are you looking at this one at the moment? Does it make sense? It's obviously looking to diversify at this point.
Yeah, you're spot on, Andrew. It's all about the diversification piece, and they've got some challenges at the moment with the plasma collection. So if anything, it's just reinforced that need for diversification, and it gives them an opportunity to do some cross-selling of their CSL products to sort of a new client base as well. Remembering the last time they did a capital raising, I think from memory it was around 6-7 years ago at $36 a share. So a little bit different now at $273. But it makes sense for them. However, I guess whenever you've got a chunky acquisition, it's certainly in excess of 10% of their total market capitalisation. And Henry and I, over the last 12 months, have spoken about many companies when they're making acquisitions. You're always just a bit cautious, trying to sort of integration of cultures, trying to get those operational efficiencies, etc. But CSL is an incredibly well-run business. There are a number of opportunities for them from a synergy point of view, to try and sort of reduce costs, etc. If I was a CSL shareholder, I'd probably be taking up the offer. But equally so, I can see the next 12 months being challenging for them in the context, as I said, of all those things I just mentioned before, but good on them and makes sense.
All right, so what, you're holding at this point?
So if I'm a CSL shareholder and I don't want to participate in the share purchase plan, I'm not a seller. However, if I'm a CSL shareholder and I'm, saying, hey, Andrew, should I take up the offer? Then, yeah, look, I'd take it up. But just understanding you're not going to pay $273 and then watch it zoom up to 320, 330. It may do that over time, but there's a few things we need to get through. And even without this acquisition, the concern that I have in the short term is those plasma collections. They're under pressure, plus those immigration laws, if I can put it that way, in the US as well. It's really being a challenge for them.
Yeah, it's certainly a bone of contention. Henry, how are you looking at this at the moment? I guess it's not just those direct shareholders. I mean, if you're investing in the local index, you're going to have a slice of this, aren't you? Because it's such a heavyweight.
Well, yeah, I mean, that's the end of the day. It is such a heavyweight. Index funds, etc. All the institutions that are involved in this will be very supportive of this. This is a huge, huge dollop of cash they're raising. This is the biggest ever capital raising in Australia, apart from the tranches of Telstra. So there's going to be a massive amount of indigestion. Maybe CSL should look at that market, because this is going to cause some serious indigestion, at least in the short term. Even a $750 million share purchase plan, that's going to pressure the price. There's going to be a lot of retail investors that sell their shares on the market to buy back in under the share purchase plan and do that kind of SPP arbitrage. So that's going to be rife. So I think in the short term, this is going to weigh. Obviously, the strategy to diversify away from blood plasma is not a bad one, and they've clearly been looking at this asset for a long time. I guess the big winner out of all of this is Martin Ebner, who holds 23% of Vifor, and he has just been rubbing his hands with glee to accept the cash that's coming his way. I've got to say, that there's not the usual kind of synergies, clash of culture that you get with these kind of takeovers, because there's very little overlap between the two companies. They're basically just bolting on something, and it's not insubstantial. It's nearly 13% of the market cap of CSL in this deal, so it's not an insubstantial deal. And I know we all talk about the market darling that is CSL and what a wonderful stock it is, and it has been in the past, but let's face it, for the last year or two, it has gone absolutely nowhere. It has missed the COVID bounce. It has even missed a COVID fall, so there's not even any bargain hunting around for this one. We've now got Moderna that's going to be opening a mRNA vaccine facility in Australia in the next couple of years as well, which is going to increase some of the competition for CSL. So, they clearly need to do something. Obesity, diabetes and heart disease is the way of the future. I've certainly nailed that one myself. And I'm looking forward to my old age with that. But yeah, I think for me, the jury is well and truly out on this one. I think there's going to be a serious period of indigestion. This is a massive, massive deal for any company. And, you know, here we are, all-time highs, farmers all-time highs, and CSL are lobbing $17 billion of shareholders' money at this. Yeah, for me, it's if you're a CSL shareholder and a believer and you still, you know, obviously think that this is the wonder stock, then please hold it. But I think in the short term, at least the next 6 months, we're going to see some indigestion in this stock for that period of time.
All right, so a hold from both, but obviously need to keep an eye on how this pans out.